Welcome back, and joining us to put the day's markets action into perspective is Nick Kunza from Sanlam Private Wealth. Thank you so much for your time, Nick. Another day, more gains on the JSE, and quite pleasingly today we're seeing even more gains on the rand, which is quite nice, below 18 rand against the US dollar. Talk to me about how you're predicting this, power that we're seeing behind the JSE, and particularly the local currency.
Yeah, on your intro, when you said putting it into perspective, I think it's quite difficult to, when you're seeing these moves in some of these individual SA Inc. shares, 5, 6, 7, 8% each day. This is the third day of decent sort of runs. How are we positioning ourselves? It's quite difficult because, obviously the initial impression from investors is very positive. All of a sudden, the overseas houses as well have all of a sudden, who have been underweight South Africa, are certainly having overweight recommendations on us now. And as net sellers for a year or two, if they have to come back and put $100 million into SA, it moves the market 1,000 points is what we're seeing. Rand under 18, I think that for me is the big barometer, and often not looked at by the retail side. But you should take a look at these bond yields. They're looking very, very nice indeed. Almost single digits on the front end of that curve. SA sort of 2030 under 10% now. These are very, very positive signs, and often we get a little bit lost with the equity markets, but quite frankly, the real indications are those fixed income markets, and they're telling quite a good story for now.
Yeah, it's quite interesting because usually when you see such sharp moves, you kind of get a sense of nervousness that at some point people might start taking profits. Do you not think now is the time? Do you think that we could see a sustained momentum in terms of this positive sentiment, where people are actually going to stay in these equities for a long time?
I think that's the difficult one to try to grasp now, certainly for investors. When you see sort of research notes go out from big sort of US banks and Swiss banks, and they expect the buying to come in for a few days, I wouldn't, it's not going to stop tomorrow. Let's hope this is not a one-day wonder. There usually is a few days of flows. Look, nothing goes up in a straight line. Some of these banks and insurers moving, I think it was Old Mutual up about 20-odd% in 3 days. It's not going to carry on doing it. But I think in my experience, definitely overrules any sort of fundamentals. And I would expect this to continue for the time being anyway. But again, keep an eye on the rand, keep an eye on those bonds, will give you an indication if things are turning.
Yeah. Well, actually, I don't know if this is, what did you make of the inflation figure? Of course, we're kind of blinded by all these good news, but then you have inflation. It's good news that it didn't go up, but it didn't change from April at 5.2%, and it's still not anywhere close to that 4.5% midpoint of the target range there by the Reserve Bank. What did you make of that?
Yeah, when it first came out, the comments was like, who cares? Let's just keep this market
going.
But you've got to keep an eye on this because the South African Reserve Bank, one of their mandates is to keep inflation under control. And it's still a little bit, as far as I'm concerned, on the stickier side. But then that would tie in exactly with Mr. Kanyagi and his team, who are notoriously hawkish. But on your intro, you mentioned the BOE tomorrow. We had the ECB last week cutting. And, there is clearly an incentive from central banks around the world that have seen a peak in rates. So he must be looking on this and wondering when his turn is next. But inflation print like that is still a little bit on the sticky side, even though it is a month or two behind, to be honest.
All right. Well, before we go to your stock pick, let's take a look at Libstar. It came out with its trading update today for the year end, reporting on top line growth, but a decline in volumes. I guess really a trend that we have seen with a lot of businesses, particularly the food producers. They're saying that they've made a progress on a number of initiatives. We did see investors reacting positively to Libstar as well today, as expected.
It was expected, and quite frankly, specifically with the food producers in South Africa, what they've had to go through the last year or two, the provisions, as you mentioned, had to put in place, taking care of the load shedding, alternative energy sources had to put in. There's been a massive cost in that. So that a base effect we'll see come through. That is quite backward looking. So I suspect something like a Libstar, the other food producers, nicely positioned going forward as well. So I suspect things will probably get better from here. And as certainly as we go forward, that particular sector will see more demand coming in.
All right. Well, Nick, let's get to your stock pick for today. What are you choosing?
Going with, well, originally I said any of the banks, but let's be specific. Probably Standard Bank or maybe ABSA. ABSA a little bit more SA focused, Standard Bank a little bit more outside of Africa now with their profits. But either or, financials for me are always a leading indicator. The lead market's up and the lead market's down. Given what we spoke about earlier, the bond yields, where the rand is going as well, I think these South African banks offer a decent value. PEs of single digits and dividend yields close to sort of as their PEs, 8s and 9s. So these banks, take your pick. I think they've got some legs still to run.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Nick. That was Nick Kunza from Sanlam Private Wealth.